yet.
Okay, hang on.
Okay,
I'll tell you in just a minute. He's getting
Okay.
us live. Okay, ready to go.
I call this meeting to order, either though I don't find myself up there, but
You're there.
okay. We're in open session. We'll go to public comments first.
We have
Right.
Supervisor Condit. Newly elected Supervisor Condit. I'm very happy to
Thank
have
you.
you here.
Yes.
Thank you, Superintendent. I'm kind of hard pressed to find a meeting that Supervisor Jim DeMartini did not attend. So this is kind of a unique situation because, as we know, Jim, he went to everything. But I just thought it was important for me to attend tonight's meeting. One, because of unprecedented times we're facing. Two, because of how essential the school districts are, and of course our children and our schools during this time. And I would hope and aspire to attend a meeting on a quarterly basis or as often as possible. But I just wanted to give a brief COVID update, as I have been doing with the other school districts in District 5, as well as our other local municipalities. So since we started the PODs, the place of dispensing, we have administered 19,660 vaccines. That's great. Of course, we are only working with the vaccine totals that are allocated from the state. So we are trying to be efficient and administering those vaccines as quickly and as efficiently as possible. But we are handcuffed by how much we are given and allocated from the state of California. Right now, we have PODs established in downtown Modesto at the Central Plaza. We have it over at Stanislaus State and in Oakdale. Tomorrow, we will be opening a POD in Patterson, which will be great. But again, the supply of vaccines we have been given for that site in particular is only 500. So we're only working with what we are given. We are administering as 65 and plus, but also our local pharmacies have been given allocation of vaccines as well. So if they might necessarily either make an appointment with their private physician or go to a local pharmacy, or they can go to our public health clinic. But I just really want to let you guys know the progress we're making. We're trying to work as efficiently as possible. Information is not only changing daily for us, but it's changing hourly at times. And I know our county staff and our administrators, our sheriff, who's the director of our Office of Emergency Services, is trying to work as efficiently as possible. But hopefully we can make a dent in this and curve the COVID the best we can moving forward. And hopefully we'll return to normalcy as soon as possible. But we are definitely making the effort. And I'm happy to answer any questions or concerns that you have. And that's why I wanted to be here tonight. So I really thank you for allowing me to join you.
I have a question for you.
Sure.
We're going to get a dispensing center in Ceres.
We would like to have one. I really would like to see a dispensing center in each of the 9 cities.
Sutter Gould is doing it out of their urgent care center on Whitmore.
Yes, and again, like those facilities have been allocated their own doses of vaccines, but our public health department, which are the PODs that have been established in the areas, that would be a possibility. Right now, those PODs, like I mentioned, are Modesto, Oakdale, Patterson, and Turlock. But if we can get a county clinic in Ceres, that would be great. But again, we're thin on the vaccines that we've been allocated. So we can really only work with the resources we've been given. I did speak with Assemblyman Gray yesterday, and I really think that working well with our state legislators and trying to make sure that we have equal resources as the other regions in the area are in the state is so essential, and trying to make sure that we have just as much resources as everyone else does.
Thank you, Mike. Anyone else have any questions?
Just wanted to mention how important the education and outreach is, not only having the dispensation of the vaccines, but also educating our community as to the importance of the vaccination. There's fear in our community. They're not trusting fully, and that requires building relationships and trust among our community.
Absolutely. Absolutely. And happy birthday again to you. I hope you had a good day.
Thank you.
Thank you, Supervisor. It's always a pleasure to have, looking forward to having you here. I shouldn't say always pleasure. It's the first time you've had a chance to be here, and we did not see Supervisor DeMartini, so it's good to see you here.
Well, I hope to be back, and I will be back. And thank you guys for everything you're doing. I know it's challenging times for everyone, and just keep up the good work. And if I can ever be of a resource to you, or if I can ever be of help, or if I just need to be educated on your perspective and what you're going through, I'm all ears. I have open door policy, and I'm just here to help and to serve.
Appreciate that. And I'm sure that we'll meet with you. A couple of us will probably want to meet with you maybe in the coming weeks.
I look forward to it. Thank you.
Thank you.
Thank you very much. We're going into study session, risk management. Dan?
Thank you very much, and good evening, everybody. We are happy to have Susan Adams with us tonight. Susan is the Executive Director of CRISIG, the Central Region School Insurance Group, and she is going to give us an overview of risk management as it relates to school districts, and then also some specific information and data from Sears Unified School District. So welcome, Susan. Thank you very much for being here. We really appreciate it.
You're welcome. Let me see if I can share my screen here. Okay, are you seeing that?
Yes.
Okay. What I thought I'd do is just give you an overview of CRISIG, who we are, and then I'm going to give you some specific information about Series. So just for those of you that may not know who we are, we're a joint powers authority. We were formed under government code, which says in California, if you have 2 or more independent agencies, you can group together or pool together. California is unique in that we call ourselves joint powers authorities. In the rest of the country, we're called pools, because basically what it is everyone pools their money together to pay for claims. We were formed on July 1st, 1980 as a workers' comp pool. So we've been around for 40 years now. We've then added dental and vision coverages in 83, and in 1985, the property and liability pool was established. Series is a member of all of the programs that we have. We are providing, in the workers' comp program, we have 24 members. They are all of the school districts in Stanislaus County except Modesto City Schools and Sylvan. Sylvan is asking us to look at their program for July 1st. So we may see them join our program.
That's probably good news.
Yes, it's very good news. Their new CBO came from Gustine, so she was familiar with us because we have 8 members in our property and liability program in Merced, and Gustine's one of those. We're governed by our board of directors. Every member, every district has a seat on the board. They have a board member and they have an alternate. Currently, Scott is the board member and Dan is the alternate. And then we have an executive committee that meets pretty much every month, and they do the day-to-day work of the group. Scott is our past president. He was our president for 4 years and for the last 2 terms, and he asked, and we did make some changes at his request to put a term limit on presidents so that we will now have a chance for everyone to rotate through and learn about CRISIG and become the president. CRISIG itself, there's only 4 of us. We're a small operation. We outsource a lot of our work. I'm the executive director. Angela Jacobson is our chief operations officer. She's been with us, I believe it's 17 years now. And she's the Series girl, born and raised. And Carrie is our return to work specialist. And then we have an office technician, Valerie. Then we outsource all of our loss control services, and I'll get into this a little bit farther along in the presentation. But Terry Pritchard, and I believe you guys are doing some work with Terry in addition to what she provides through CUSD, but she does all of our trainings for all of our members, monthly new employee training, all of the regulatory trainings, any specific topic someone wants. She issues quarterly newsletters. And then she does go around when schools have students all the time and pick up all the hazmat from the schools, the sharps, etc., and disposes of those. So first, I'll start with the workers' comp program. We are self-insured for the first $1 million of every claim. So the way that works is every year we calculate rates. The districts pay in what we call contributions versus premium, because we're not an insurance company. So we are called contributions. And from those, we pay out your claims. So they're paid out $1. Our members do not pay the claim per se. They've paid into the pool to pay the claim. We buy excess insurance above the $1 million if we were to have some type of a catastrophic loss involving, typically it's going to involve multiple employees in one loss, that we do buy excess coverage from Safety National. And we have our claims administered by Pegasus Risk Management. Pegasus Risk Management is in Modesto. They're part of the Simon companies. And there are 2 dedicated indemnity adjusters, a medical only adjuster, and then the supervisor. There is a dedicated adjuster for Series. So she's very familiar with all the claims that come in from Series. Works with David a lot in getting settlement authority on these claims. I'll talk about the historical rates in a second. I did want to let you know that what we do is every year we calculate the rates, and I'm going to show you what they've looked like historically. If we have extra money, extra equity above a target that we've set, we will release those funds. Historically, we've released about $10 million. And we also, every year, provide a safety incentive fund to our members that is based on your contributions to the total contributions of the group. So Series is our largest member. With Turlock, you guys are back and forth right there together. But currently your allocation is $41,473. And that's money is used for anything you need to buy that would help reduce workers' comp losses. And we've decided this year, normally this money is at the end of the year, if you haven't used it, it goes away. But given COVID, we've agreed to roll this money over for another year because we haven't had very many claims come in. We haven't seen the losses. So we want the districts to be able to use this money again next year if they need it. We do have a full-time return to work specialist. So for those employees that are injured and cannot come back and do their regular job, Carrie works with the HR department, and she works with the supervisors and the employees in getting the employees back in some type of a job, whether it's their normal job on a restricted basis or another type of job, some type of a job to get them back to work. That way, we're not paying out indemnity costs to them, paying them to sit at home, basically. We found that if we can get them back to work in any type of capacity, if they have to get up and get dressed, of course, this was all before COVID, but get up and get dressed and go back to work, the chances are they're going to recover quicker and get back to their full-time job. And these are some of the benefits. This slide here shows you just the dividends we've given. I gotta get rid of this there. Over the years. The last dividend we released was in 2012-13. Once we have the money, if we find we have extra money to return, there's a couple ways we can do this. We've in the past used it to offset rate increases for the future year. We've allowed members to apply their portion to their future premiums and or contributions. And we've also just issued checks. So it just depends on what the board decides that year, how they want to handle it. Okay, this slide here shows you our historical rates from 1980 to current. And as you can see, in over 40 years, our rates have gone from $1.58 to $1.72. So we haven't had a lot of increase over the years for considering what medical costs are, et cetera. We've been really very, very fortunate in having getting a lot of good settlements on claims, keeping our rates down, and self-insuring the first $1 million makes a big difference because we're not relying on the insurance market to set our rates. We're setting them ourselves based on our own experience. This slide here, I'm showing you the last 10 years worth of our rates and what's included in our rates. And as you can see, we'll look at the current year. The red portion, that's our self-insured layer that we would pay claims out of. So you can see that that's kind of gone up and down over the years. It's been coming back down. It's down to $1.47 per 100 of payroll. Our excess insurance, again, you can see it started at 0.06 cents, and we're down to 0.049. And the blue bar is our expenses, and that's expenses to run the JPA. So we've kept those expenses down. They're just a little bit over 11% of the total rate. The one part of the factor, once we come up with the rate, every member gets an experience modification factor, and that gets applied to their rate. And what that is we look at the last 3 years of losses that are capped at 50,000 per claim, and we look at your payroll for the last 3 years, your actual payroll. And we calculate, and I say we work with actuaries, they calculate the factors. Series has the best experience modification factor of all of our members. Your factor for the current year is 0.747, which means you're getting a credit of over 25% off of our rates. So that's really good. We have other members that we have not a lot, but we have quite a few members that are over 1. So they're actually getting debited because they have worst experience. So this is how we help even out the costs. If you have real good experience, you get your people back to work, you don't have large losses, you're going to see the results in paying your premiums going forward. This is the actual series actual history for the last 10 years. As you can see, payroll's grown from 66 million up to just under 115 million is actual last year. These are the contributions you've paid in, what your actual losses have been, and then what your loss ratio is. So over the last 10 years, the loss ratio is 60%, which is very acceptable. That's there's just 1 year, there were a couple larger losses that were driving the results up, but 60% is a good loss ratio. And then this is just a graph showing the exact same information, just in a graph form. So you can see in the red is what you've contributed versus the blue, which are your actual losses. Now those losses, especially the last 5 years, are going to continue to grow and develop as we end up with finding out more information about the losses, especially the last couple years. As you know, workers' comp claims can take 5 to 10 years, some of them, to settle. Once they get an attorney and we get into the whole court system and we get into having to get different doctors doing reports, sometimes they drag on and on and on. But we try and get them settled pretty quickly. And then this graph here is showing you what CUSD's rates would be, and that's in the blue bars, at Unity versus where Series rates have been. So as you can see, our Unity rates this year are $1.72, and Series is actually paying in at $1.35. And this is just this graph shows the same thing, just in a different format. And again, just lumping all 10 years together, you've paid, if you didn't have an experience mod, you would have paid 16 million in, you paid 13.8, and you have 8.3 million in losses, or 60% loss ratio. Some of the services that we provide the members within the workers' comp program is we Target Solutions. It's an online training program that all the employees have access to. Stop It is actually more of a liability app, but it's the anonymous reporting application. We talked about the safety incentive programs. Some of the loss control services I mentioned, Terry provides, I've listed here, new hire training, utility cart training, bloodborne pathogens, the pesticide program, forklift, playground safety. She'll come out and measure the material in the where the playground is, fire safety. She's been really busy with all the COVID requirements this year. And then we hold a workers' comp annual training day that we invite all of our workers' comp people from the districts to attend. And we do some type of interactive training. Usually we've done training on fraud. How do you report fraud? How do you know if you have fraud? And another example is the lifetime of a claim. From the minute an employee comes to you and says, I have a claim, what happens with that claim? So different things like that. Okay, so now we'll talk. Do you have any questions on the comp program?
If you ever have any fraud, does it count against your experience modification?
Yes, it would still. We have had two recent, well, I'd say in the last 3 or 4 years, that are paying us back. So then that money would get credited back against the claim, but they pay you back at like $25 a month. So it's going to take a long time to get paid back. The claim is limited at 50. So even if it was fraud and it was a larger amount, only 50 goes into the experience modification factor. But that is a good question. If we had one that was less than 50 of fraud, we haven't had any for you guys. We've investigated. Trust me, we do a lot of investigation. The minute we think there's anything funny going on with the claim, Pegasus assigns an investigator. They will do surveillance. We'll talk to witnesses. We try and do, well, we don't try. We do as much as we can to try and figure out. We talk to your staff and get information from the staff on what they think is going on. But yeah, it still would be paid because we paid the claim and then we're just waiting to get paid back. So, and you're only the last 3 years are in your mod and then they fall off and your new year comes on. So if you had, let's say 3 years ago, a really bad year and the new year comes on as lower, you're going to see that in your experience modification factor decreasing every year.
Thank you.
You're welcome. Okay, then I thought I'd share some information on the property and liability program. It is one program for both lines of coverage. We rate the liability on ADA, which your current ADA that we're using is 14,285. We are self-insured for the first $250,000 per occurrence, and we purchase excess insurance up to $40 million. So we now have 40 million available. We had 20 million about 2 years ago, but we changed our excess and we now purchase up to 40 million. The coverage would include bodily injury and property damage. It also includes auto liability. It includes your school board legal liability. So for all of you board members, your coverage is through this program if you were to be sued acting as a representative series. It includes employment practices, sexual molestation coverage, the auxiliary organizations that are under the control of the school district, and charter schools that are directly controlled by the school district. Property coverage, we rate on total insured values, which right currently your total insured values are about 380 million for all of your locations. We are self-insured for the first 100,000 of every loss. And then we have excess liability coverage up to 300 million per claim, which we know that would be probably never reached, but that is just a limit that's out there for members. If you had, let's say, you know, the Butte schools, when they had their fire up there and it went through and wiped out a bunch of stuff, that's where you're going to get into the high limits. The coverage includes the real property, personal property, contents. Auto physical damage is included in this program, and it is replacement cost coverage. So if one of your vehicles, buses or regular vehicle, is totaled, you will get a new vehicle based on the new cost. We now have flood coverage included in our new program. Again, we changed programs about 2 years ago, so there is some flood coverage. There is course of construction coverage. So if you are adding onto your schools or building something new and it's under $250 million, you don't need to purchase insurance for that. It is now automatically covered under this program. Once it's completed, it gets added on as a new site or location, and then it's included going forward in the insurance costs. We also provide coverage for all of your mobile equipment. Other coverages that are included is crime or fidelity, as you may hear it called. It's $1 million per employee that's handling district funds. The employees do not have to be bonded anymore. This covers them. They don't have to be named. They just have to be employees that are handling district funds. And this is for theft, etc. We also have cyber liability coverage, which has increased over the years. When we first purchased this, it was $3 million in coverage, and now we're up to $12 million in coverage for cyber. And then we purchased a program last year called Deadly Weapons Response Program. And it's a small limit, but what this basically is a triage. If something were to happen on your school site from a deadly weapon, whether it's a shooting, a car, something like that, and it just happened and you need funds you need someone to get out in front of the media, you need some funds to help with medical expenses or etc. An example of this is, I don't know if you guys remember, a couple of years ago, there was a woman came out of a library up in Sacramento and was going to her car, and a homeless man approached her, and I think he stabbed her and killed her. Well, this program responded to that, and while the insurance companies were fighting whether or not it was a workers' comp claim, they were able to give the family money to start the burial process, to get out in front of the media and tell the media what's going on, etc. So it doesn't cost us much money at all, but we thought it would be a nice add-on to our program if we ever needed it. And then we've also purchased over the last few years systems for our programs, risk management programs, because we felt that if we ask the members to pay for it, they may not have the funds. And it's something we wanted every member to have and to use to help reduce costs. The first is Raptor Technologies, which is the visitor information system, which I believe you guys are using. That is the system that you would scan your driver's license and they check the National Sex Offenders Database, which is constantly being updated.
We are using that.
Okay. Target Solutions, I mentioned earlier, it's an online training program for all our members. Stop It is the anonymous reporting program where initially started out as bullying, but it has expanded into anything the kids want to report or adults want to report. If they see, as custodians see something inappropriate going on, a student is at home at night and they see something on social media that's going to happen the next day at school, they could report that, etc. We also purchased for all of our districts and national NASDAQ, which is a National Credential Clearinghouse. We bought the licenses for those. And the reason we bought this is that this again goes back to the sexual abuse and molestation coverage, which is kind of what Raptor was. We're real concerned about insurance companies not offering coverage for this in the future because there's been so many claims, and recently the California State Legislature approved AB 218, which says now you can file a claim up till age 40 if you were sexually abused when you were younger. So we know that a lot of times, just from data, that the offenders move around. They move from state to state, from school district to school district. And so what NASDAQ does is it's actually a way, when you do a new hire, you would run them through this clearinghouse and they would let you know if there was anything on their credentials from another state, which normally you wouldn't have access to. You just have the California data. And then the last program we bought for everyone is Origami Risk. And Origami Risk is a computer program that all the districts have access to. And depending on who in the district, we they're going to report their claims through it. You can review your claims. You can look at the notes on the claims. Depending who the person is, the access is, denied somewhat. Where Scott, I think you have total access to everything. But it's a way for the districts to look at the types of claims they're having. And like I said, to even report the claims, because we handle all of our claims now are administered in Origami. So we know up to date what's going on with the claim and what the status is, what the values are, etc. So if there's a claim, Millennia usually does it for you guys, is she'll input the information, she'll upload pictures, diagrams, if it was an auto accident, diagrams of the accident, etc. And then that information goes immediately to our Eric Knack, who does our property and liability claims, and he has complete access to everything, as well as you in the district have access to what's going on with that claim. But it's also really good for you you can do charts, you can do graphs. What type of claims are we having? Are they trip and falls? You can break it down by body parts, you can break it down by age, however you want to do it, which helps in understanding the types of claims that you're having. And then this is just a graph of the structure on our property and liability programs. So you'll see starting at the bottom, Series now has a $25,000 deductible. A couple years ago, we offered deductibles. We used to just do a $2,000 deductible for everyone. And we started taking a look at the types of claims we were having and the dollar amount of claims. And we decided to offer higher deductibles in lieu of getting credit. So at a $25,000 deductible, there's additional credits on your rates for that. So you will pay up to $25,000 on each and every claim. If it exceeds that, then CUSD pays. On the property, we pay up to $100, as I mentioned before, and then we're in a PRISM JPA. They're out of Sacramento. They're the largest JPA in California, and they provide up to $300 million. And then on the liability, we have $250,000 self-insured. We purchase up to $25 million from PRISM, and then we have 3 other carriers above PRISM that offer another 15. So that's how we get to 40 million. And sorry. Okay, and here's just a 10-year look at your own history, the ADA, the TIV, actual losses. You'll see in 0506, we had that one very large auto accident. That's what's driving that number up. And then here's your contributions over the years. As you can see, as you look down here in the last couple of years, prices have gone, our contributions have increased substantially, and that's primarily the excess markets, and it's because of the sexual abuse molestation claims. They're seeing a lot of them. They're very concerned about them. We're still probably going to see rate increases this year, most likely. Also, properties increased a lot because of all of the catastrophic losses that have happened, all of the wildfires, the tornadoes, the hurricanes, etc. Overall, granted, you've got the 1 year that's driving the loss ratio, so you're about an 88%, but without that, you'd be a pretty low loss ratio. So you guys are doing really well. Series is doing really well. And then this graph just shows it in a different, shows the same thing, contribution and losses, just in a different way. And then the last 2 coverages are the dental and the vision. We are full insured on those. The dental comes from Delta Dental. We haven't had a rate increase since 2013. We do take a look at that every year, and we haven't. Actually, we've been giving about every 3 years, we end up giving money back. We end up having about $1 million for the JPA, and we end up returning that to our members. Vision is full insured again. VSP is the carrier. We haven't had any rate increases on that either. And we have also done some rebates on vision over the year. We don't have as much money usually in vision as dental, because dental is a larger program, but as soon as we have any money that's in excess of what our target equity thresholds are, we do return that back to our members. And then this slide is just an overview of the benefits, which you guys get every year. Plan A, Plan B, Plan C's, and the coverage. And the same thing on the dental. Any questions I can answer for you?
I can tell you that Susan and her staff do a fantastic job helping keep our costs down for these programs. They're very important, obviously, to have insurance.
Yes, thank you.
Thank you very much.
You're welcome.
Good report. Thank you.
That's the end of our open session. We will now go to closed session.
Susan, thank you.
Okay,
I'll
thank
see
you.
you. I think we're live now, but I'm not 100% sure yet.
Almost.
Not just yet. I'm getting it started.
Okay, thank you.
Do you want to try to do it on your cell phone? It's not letting you in. Okay, we'll keep trying. We'll tap in. Can we tap into our computer once you're done with that? Okay.
So just let me know once we're live.
So
Okay, we are live now. I just
We're
verified.
live now.
Perfect. Okay, so anybody out there who's watching us, we're going to be delayed starting for about 5 minutes probably, or just got out of closed session, is taking a quick break. Betty, if you can hear me, we are live now.
Okay,
So we won't start yet, but just I wanted the public to know that we're coming back shortly.
all right, thank you.
Uh-huh. And we've got our student board reps I saw. There they are. Again, just so everyone knows, we are streaming, but we're just going to be delayed in starting the meeting for about 2 or 3 more minutes. Mike. Brian's here. Again, for any public that's watching us stream on the streaming channel right now, we are just going to be starting in a few minutes here. The board got out of closed session right at 7 and wanted to take a quick break before we start the rest of the meeting. So just another minute or two, we're going to have Trustee White, who's out in the country and with all the weather has some internet issues. We're going to have her dial in just a minute here. Betty, no issue in just waiting another minute or two, see if we can get Valley in.
Okay, keep trying.
Yeah, they think they can do it through the phone.
Okay.
Yeah. Should be just another minute. They're just getting it worked out.
Very good. Nice to have alternatives.
Yes. I think I can see Meryl on the phone with her. I'm wondering if there's an issue.
Okay.
Meryl, I don't know if you can hear me or not. Are we close?
We're getting close. We're trying to work out the details. I may put her on speaker on my phone.
Okay. Why don't we're going to go ahead and start then. And
Okay.
okay.
Oh,
That works for me, so we started here.
okay. He's gonna try to merge you on, Valley.
Okay. Here we go. I see her.
I call the public meeting to order. Will you please stand for the Pledge of Allegiance to the flag led by Trustee Perez?
Salute. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, and with liberty and justice for all.
Item 4 is approval of agenda. Are there any
Agenda.
changes?
No changes.
I call for a motion.
Make a
Make a
motion
motion to approve
agenda as
the agenda.
posted.
A second.
Okay. Motion by Trustee Molino, second by Trustee Perez. Marilyn, would you poll the board, please? She may be too busy. Poll.
Here she comes.
Okay.
Do you want me to try to do it?
Okay,
I can-
Denise.
He did.
I can do it.
I got it.
She's got it. Okay.
Okay.
Victoria Rodriguez Ochoa,
Aye.
Virginia Moore,
Aye.
Mike Welsh,
Aye.
Brian Delaporte, Ugo Molina,
Aye.
Fay Lane,
Aye.
Lourdes Perez,
Aye.
Sally White, does she say yes? She's saying yes. Betty Davis,
Aye. Passed as presented. Hearing section, there was no, Lourdes, you want to report out? Oh, no, I'm sorry, wrong thing. Hearing section, are there any public comments
We do have one
Item.
public.
not on the agenda?
We do have one public comment. It's not clear to me if this is on the agenda or not. It could be under school openings, but it's talking about grading. So I'm going to treat it as not. It's from
Okay.
an Argus student who asked us, or just voiced a concern about having students be able to submit assignments more than once. I thought it was an interesting, very thoughtful comment, given all the conversations about grading. And I know that some of the issues are being talked about in the grading conversations. So the board has been provided with a copy.
Yes, they have.
Dr. Siegel, I just wanted to let you know, Trustee White is on the call now.
I can see her phone and I can see she's not muted. Thank you.
Okay, just, all right, is that all right? Everyone received that information to read. Is there any, okay, we'll go on to item 6, report out of closed session. Valley, is
There's
there?
nothing to report out of closed session.
Thank you. We'll go on to the item 7, consent agenda. Are there any items that anyone wants pulled on the consent agenda?
Make a motion, we approve the consent agenda as written.
I second.
Motion by trustee Welch, second by trustee White. Marilyn, would you poll the board, please?
Victoria Rodriguez Ochoa,
Aye.
Virginia Moore,
Aye.
Mike Welsh,
Aye.
Brian Delaporte,
Aye.
Ugo
Aye.
Fay Lane,
Aye.
Lourdes Perez,
Aye.
Sally White,
Aye.
Betty Davis.
Aye. Passed as presented. We'll go to 8, action section. A is course outlines for Modesto Junior College articulation.
Good evening, everyone. This is an action item. I'm bringing to you 3 course syllabi for some courses that we are hoping to articulate with Modesto Junior College so that our students can benefit from that. And so we've got those outlines attached for you today. I'm hoping you'll approve this action item.
Are there any questions or information that you need from Amy at this time? If not, I'll call for a motion.
Make motion to approve the course outlines for the Modesto Junior College articulation.
And I second.
Was that Virginia
Victoria.
No, Victoria.
or Victoria? Okay. Motion by trustee Molina, second by trustee Rodriguez Ochoa. Marilyn, would you please poll the board?
Victoria Rodriguez Ochoa,
Aye.
Virginia Moore,
Aye.
Mike Welsh,
Aye.
Brian Delaporte,
Ryan, you're muted.
Aye.
Ugo Molina,
Aye.
Fay Lane,
Aye.
Lourdes Perez,
Aye.
Sally White,
Aye.
Betty Davis.
Aye. Motion passed as presented. Item B, board policy, October 2020 policy revisions.
These have been on twice before for information and study and are now here for your approval.
Anyone have any comments? If not, I'll call for a motion.
Make a recommendation to approve the board policy for October 2020 revisions.
I second.
Motion by trustee Lane, second by trustee White. Hold the board, please.
Victoria Rodriguez Ochoa,
Aye.
Virginia Moore,
Aye.
Mike Welsh,
Aye.
Brian Delaporte,
Aye.
Hugo Molina,
Aye.
Fay Lane,
Aye.
Lourdes Perez,
Aye.
Valley White,
Aye.
Betty Davis.
Aye, passed as presented. Going on to information and study, A, superintendent's report.
Thank you. And I actually, we'll talk more during the COVID school opening section, but I wanted to share some information from the superintendent symposium that Dr. Wickham and I have been attending for the last couple of days. And there's more sessions tomorrow, that my calendar is so tight, I don't know that I'll be able to attend much. It's all virtual. It's very different going to a virtual conference, but they had a couple of the highlights here, four of the highlights. They had Governor Newsom actually sit down with the executive director of AXA, Wes Smith, and answer some questions. A couple of things that came out is he emphasized that he's very flexible on some of his budget proposals, that you have to have the conversation, you have to have a starting point. And he views his proposals in some areas as starting points, and is willing to, especially on the reopening grant one, understands that the proposal as it was put forth is not going to be how it ends up, and didn't seem to have an issue with that, which is good. It's very good. He talked about how much and how fast the numbers are falling, which is very promising. Another thing he talked about, and there was more, I'm just giving you a quick summary, that vaccinating school employees is very important, but it's not a precondition for reopening schools. So we cannot wait for all the people to get vaccinated. There's too many people that need to be vaccinated and not enough vaccine supply right now to wait for that. So getting educators vaccinated is a priority, but there's lots of priorities out there. And the problem is when everybody's a priority, then in some ways nobody is. So we know that we're high on the list, but so are a lot of other people. I attended a session rather on safety that was done by a couple of pediatricians. It was excellent information. One of the just tidbits coming out of it is they explained that children actually, for reasons with their physiology and some receptors in their body that aren't developed, are not as susceptible to the disease and less contagious, because it's not just something magical about kids. It's just that their bodies, the places where the virus attacks, haven't matured yet, and so they're not as susceptible to the virus. As kids age, they get to junior high and high school age, they start to become more susceptible, and the older you are, the more susceptible you become. So there was also a session on grading practices. I did not realize as I was watching it, I wrote the guy's name down. It's like, Amy, this guy you got to listen to. I didn't realize that he is one of the persons she's working with on our grading practices. Yeah, he's actually one of the primary guys you're working with. So it all sounded so familiar, and I know why now. But very proud of what the district has done on grading practices. We're ahead of the curve, but definitely a lot of movement in the field that grading practices are archaic and have to be looked at. There's some huge equity issues, and we can talk more about that when policies come back to you later in the spring. And the last I thought I would mention, Tony Thurmond, the state superintendent of public instruction, talked about testing, and that the state board is ready to look at doing something to change away from the state testing in the spring, waiting for the current presidential administration to tell them a waiver would be acceptable or something else would be acceptable. There's a lot of different options they're looking at, understanding that right now, as of right now, the testing is going to happen, but that is likely to change, or very possibly could change. We still have to prepare for it as if it's going to happen. And last, he was forced to make a prediction and predicted that the Tampa Bay Buccaneers will beat the Kansas City Chiefs in the Super Bowl. And so that is all I have for my report.
Okay, item B, board report. We'll start with Central Valley High School, please.
Hi everyone, it's great to see you all. So since the last time I gave you guys a report, not much has happened at Central Valley. However, we do have some exciting events coming up at school, such as Black History Month. We have a few celebratory days coming up, the 3 Wednesdays in February, where we will be asking students to post during the first week about important and influential Black historical figures. The second week will be focused around Black women in particular, and the third week will all be about social justice and awareness. So we will be having videos made by students being posted to the Google Classrooms that are accessed by all students in school so that they can view those videos and kind of get a glimpse more into Black culture and understand how important it is to American history today. And I would like to say thank you to the district office and whoever was in charge for paying for our caps and gowns for this graduating senior class. We really appreciate it. Thank you for that. And Dr. Siegel asked me to talk a little bit about the new schedule and how students are feeling about it. And I would say there's definitely two sides to how students see it and how it's playing out for them. Some really don't like getting up early, which is understandable, or staying longer than usual. But I think overall it's a net positive for coming from the basis of education and just learning new material. It's better overall for students in the long run. And recently my principal, Mrs. Lubinski, has been meeting with students to talk about what we need as students in terms of social emotional help, academic help, any type of support that we will need when the time comes for us to open up. So she is having conversations with students in cohorts and asking us what we would like to see from our teachers specifically, as well as our administration on campus. So that meeting is coming up on the 3rd. And also the student support specialists on our campus are making themselves more, well, they have been since the beginning, but they've been really advertising their services on campus by making weekly videos for us to watch. And they also educate us a little bit about mental health as well. So they've been really trying to make an effort to promote what they do and encourage students to ask for help if they need it. And that's all I have for you guys. So thank you so much.
Thank you very much. Ceres High School report, please.
Yes, good evening, board. So today I actually have quite a bit of stuff that I will be reporting to you. So I am sorry if I talk for a really long time. But like Virginia said, I would like to thank you on behalf of the entire senior class for our caps and gowns. I know in the past it has been difficult for students to pay off their caps and gowns because it's an amount of money that they just don't have lying around for this kind of stuff. So I know it will be very beneficial and a lot of students are very thankful. So now starting off, we are officially in balloting season. Well, not for myself, but everyone who will be staying in school. And this year is extremely difficult because of distance learning, and balloting looks very different for everyone. And I know it's much more difficult, especially for incoming freshmen, because this is their first time balloting for high school classes. But their learning directors have been doing an amazing job reaching out to all students who need help and have just been there for anyone to answer all kinds of questions. And unfortunately, they weren't able to have like the annual 8th grade visit we always look forward to, but we did put a video together for the 8th graders to watch, and we showed them like the most important parts of campus, like the doghouse, the office, stuff they will need when coming back to school. And they also were introduced to teachers they might potentially have next year, hopefully in person, and they'll actually get to meet them. And now with balloting comes applications for leadership as well. So those are now available for students via Google Classroom. And elections, we still don't have a set date for those for officers, but it will be coming soon. And like I mentioned at our last board meeting, The new schedule with the longer periods has been more beneficial and efficient. Personally, I think it's a lot better to have back-to-back classes, although maybe 5 minutes is not enough for a bathroom break. And like having a sibling with the same break time, we just fight over the bathroom all the time, and it's chaotic, but we get through it. But I know a lot of students have been saying they enjoy longer periods because they feel like they're in a regular class. Our periods used to be almost the exact same length, 55 minutes. So students are saying they enjoy it more because they're actually learning. And personally, I feel the same way because before 30 minutes was not enough to get through a full lesson. And now with the extra time we have, I actually get to comprehend all the information that is being given to myself and everyone else in my class. And although college application season is practically over, there's still a lot of things that come with college, especially FAFSA. And it's very important for our seniors to fill it out. And I know our college transition learning director has been pushing it really hard and has been doing so much to try to help everyone. And actually, 60% of our seniors have completed and submitted their FAFSA application, which is impressive compared to the county average of 30%. So we are doing incredible in that aspect. And so she's still Mrs. Salinas, who is our college transition learning director, has been very helpful. I know if I have any question, I reach out to her and she answers right away and gives me all the help I need. And so through distance learning being difficult, we still want to celebrate students for their accomplishments, their perseverance during these times. So next week, we will be having a drive-through awards ceremony, which was actually postponed because it was supposed to be yesterday, but due to the terrible weather, we had to move it to next week. But we will be recognizing our students. And so last but not least, it is an honor and my pleasure to announce to you our Ceres High School Staff of the Year, Mr. Ellenbarger, which I've actually had the privilege of having him as a teacher freshman year and twice this year. I'm actually in 2 of his classes, which I feel that's the only teacher I would not mind having twice a day. And I thoroughly enjoy being in his class because he makes it fun and really interactive. And he's just like that teacher you can go to and know he will be there for you. And especially during these times, he's been an advocate for all students and like making sure everyone is getting what they need, all the help. He knows it's very important for like students' mental health right now. And so he's been helping everyone. And actually, it is because of him we got that dead week back in October, like the week where we were able to catch up on our work. A lot of students were reaching out to him and telling him, oh my, like we have a lot of work on our hands, like I need a break. And so he spoke out about it to the administrators. And he basically came up with the idea of giving us a whole free week, which thank God, because we all needed it. We know we needed it. And so he's just an amazing teacher, and he truly deserves this. He really does. And so on that note, that is all I have for you tonight. I'm so sorry for talking for way too long, but thank you for listening.
We appreciate both of you reporting, letting us know what's going on for the students and the staff. That's the reason we're here. So thank you for helping us do our work. All right, next, association reports. Start with CUT. I think Jody's here.
Yeah, I'm here. Good evening. I just wanted to start by thanking the district I've heard a lot of positive comments about the offerings for summer school, trying to get teachers encouraged, to get classroom teachers encouraged to teach our students for the extra 5 weeks. And I think the schedule and the pay will definitely encourage more teachers to do that. And so we know that will definitely be beneficial for our students. I also have to say that there is, with bringing cohorts back to the secondary level, there are a lot of questions and concerns right now that Ken, this is kind of his turn. I kind of dealt with all the elementary when all that started. And so I know he's been bombarded with concerns and questions. And so I just wanted to make sure that you are aware that that concern is out there. You know, and I know as anytime change happens, it's definitely a concern. And I know that through elementary, we've kind of worked through those, but it's different when you're talking about older kids in a bigger campus. And so I'm hoping that the staff and the admin will work together to make sure that the situation is safe for all. Thank you.
Thank you, Jody. CSEA, Vern?
How's everybody going? You know what, we really got nothing new to report. I could just say we're looking forward to negotiations on the 4th, and you know, thank you very much.
Thank you both for taking care of our employees. We appreciate that. D, revised budget overview for parents. Amy?
Hi, everybody. Just a quick item tonight. I brought the budget overview for the district and the 2 Whitmore charter schools last month. There was a slight revision needed based on some recommendations from the county office. So you have the revision for the district's parent budget summary tonight.
Does anyone have any questions or comments about that? Okay, if not, we'll go on to E, state budget update. Dan?
Thank you. Good evening, everyone. I'm going to share my screen. Okay, so I'm going to just go over some of the highlights of the proposed state budget from Governor Newsom. We know that there are 2 other major stages from here. We have the May revise and then the approval and adoption of the budget in the summer. And so things can change and often do, always do really. But I'm going to hit some of the highlights just to give an overview tonight. So some of the major themes for the budget are responding to the challenges of the pandemic, obviously, creating jobs, rebuilding financial reserves in the state, and addressing inequities in some key areas, housing, healthcare, and education in particular. The overall U.S. economic outlook, you know, some jobs returning, stock market at record highs, a strong housing market, positive consumer spending, and just a theme of a very uneven, you know, economic recovery at this point of those who are really feeling a recession versus those who are not, and that's a theme that you see in how Newsom is trying to address those inequities as well in his budget. So when we look at just impacts to unemployment, how I'd look at this graph is just to see the recovery in the Great Recession is this gray line. And then the red line here is the rate that unemployment is decreasing. So the recovery of jobs. And the projection here is that if things go this way or as projected, more jobs would be recovered at a faster rate than in the Great Recession, therefore leading to the more promising projections that it would be a faster and more accelerated recovery. Obviously, that's yet to be seen, but that is what all the projections show now. And so just another way to look, California jobs, you can see again, the inequities in terms of how the challenges and different high wage versus low wage sectors. So you see the red line versus the blue line, and you have a recovery of jobs that is on its way right now, but you see a gap between high wage sectors and low wage sectors. So again, leading to that, you know, the recession being felt in different ways throughout this pandemic. But overall, this is pointed to as positive as we go forward with jobs returning. So on this slide, you can see budget surplus projections, again, which seems so bizarre compared to where we were last year and what was being projected. But these are the projections now. Looking at the years to come as well, you're looking at budget surplus numbers. And really the bottom line with that is you'll hear people talking about a K-shaped recovery right now in the US. And you particularly think about California, the way that the state budget and then also the education side of the budget works is so driven by tax revenue that you have the top slash of the K-shaped recovery is your higher wage, higher income workers. And the tax revenue from that is driving the revenue and the surprise amount of revenue coming into the state, whereas the bottom slash of the K is the lower income workers, those who are really, really feeling the effects that those previous graphs illustrated. And so you've got this K-shaped recovery, but really that top half of the slash of that K is leading to significantly more revenue than what was projected. And so that leads to when you look at Prop 98, far more Prop 98 dollars again as was projected and looking out into next year and beyond. And we've looked at this graph over the years, and if you look over to the right of the graph, what we really point to is that if projections, the original projections came true from last year. The fear was that Prop 98 funding would be, could it be somewhere around this 2016-17 level, and that you would see this huge drop all in 1 year, and that just simply didn't happen. That's what we've heard them say at various different entities who were describing how off the projections really were, and they're just saying, look, we just could not have predicted the revenue to be what it is right now, and we thought there was going to be this massive drop in revenue, and it just didn't happen. And it may have, we may have a drop in the future, but that's not what we're seeing now, and it's not what's being projected now. And so in 21-22, you're seeing an increase in Prop 98 funding. And then so that translates to the COLA conversation. And so again, what a difference a year makes. And so you look at what would have been a zero funded COLA, or again, projections of a massive recession. And now what you're looking at is in 21-22, combining the 2.31, which was not funded in this year, combining it with 1.5 for next year. And that's where you come up with the combined 3.84, the revenue of which school districts would get in the 21-22 school year. And so when you hear about that COLA 3.84, it's the combination of those 2 years that make up that number. I'll just say that 3.84 is applied to the LCFF, and then the 1.5% is applied to certain areas such as special education and categorical programs. So not all aspects receive and programs receive the full 3.84. And so you'll hear talk about the deferrals, and remember we were going to have massive deferrals that spanned over multiple years. And the bottom line is that 2/3 of those deferrals are planned to be paid down in this proposal, but we still have 1/3 of them, and we have the deferrals still in place for this year. And so we still have to handle those with either interfund borrowing or applying for the trans, where we're able to borrow cash to deal with that. But that is a very big reduction in the amount of deferrals that were planned. So that's very positive as well. And so then you look at charts we've looked at in the past, LCFF funding factors. So you apply the COLA, and as proposed, you can see the grants, base grants per ADA, the compounded COLA, and the grade span adjustments. As we've seen in the past, you can read these across that way. And when you look at the, again, with the supplemental and concentration grants, you have additional dollars as well based on the UPP percentage above 55, which we are in series. So we get that funding as well. And then the special education base funding, there's, again, Newsom's, one of his priorities is to continue to invest in this area. And he's doing so again this year. But of course, there's continued calls for more funding above and beyond that for special education. And I'll just note that there is additional federal stimulus right now, and also more potentially from the state as well. We haven't gotten the details on that, but we will get more federal stimulus dollars beyond the CARES funding that we had already been spending on behalf of the district staff and students to deal with COVID and safety measures and everything that's been needed out there. And so we do have more dollars from this ESSER fund that we will be utilizing for programs and needs to further support students and staff. The summer school was brought up earlier as a positive, some of the things that we're trying to do to enhance summer school. And so using the federal funds for that it's a great example of use of expenditure that supports students and trying to accelerate their return and their growth moving forward. And so we'll continue to be gathering stakeholder feedback, and we're doing that now to assess what the needs are moving forward. And so that's an ongoing conversation. We've been engaged with all stakeholder groups that in the past couple of weeks to start going deep into those conversations. And then you have the dartboard. And so you can look at Department of Finance, you can look at school services, and just look at the different projections for and the planning factors moving forward. And they do differ based on the changes that we've seen the past couple of years and how it's played out in recent years. I tend to put my stock in the current year, especially right now, the current year, and maybe 1 year after that. You go much further after that, I think you're really looking into a crystal ball. Certainly, we know that next year is not really what was projected or what anyone thought it would be. And so although there may be some changes by the May revise, I think the major themes will still be the same as you're looking at right now. And just to note, we do have an increase in the employer contribution to CalPERS. So you can see that increase over here. It's a pretty significant increase from this year to 21-22. So just to note that on the chart there. But on the flip side, the STRS employer contribution rate is decreasing. And that is actually decreasing from what would have been 8.1 to 15.92%. So that's a good decrease there. So that's a positive. And then we're really excited that the meal service flexibility is going to continue. That's been a major plus. And through our stakeholder feedback, this has been coming up a lot in addition to technology support and other items that have been coming up as major pluses. But the meal service has been big for families and for students. And so we're really excited that that's going to continue at least through June 30th. So the service of our meals, the way we're doing it, the flexible service times, serving at remote locations, and allowing parents and guardians to pick them up, it's just huge for our families. And so we're going to be able to continue that. And if it's needed beyond that, we're hoping that they continue it even further and extend it. And so just to conclude, I'd say the main themes right now is surplus in California economy right now. That's totally unanticipated. 3.84 COLA as proposed. The reason for that is that K-shaped recovery. And there's still obviously a lot of inequities out there that we're aware of and that I believe Governor Newsom is aware of, and they're looking at trying to find ways to mitigate that. But that's a huge challenge because the recession has been felt very differently by different groups. There's no doubt. We will have more COVID relief dollars to leverage. And then we're just going to be watching to see what happens in the coming weeks and as we lead up to the May revise. So with that said, any questions for me?
No questions, just a quick couple of things that we learned today at the symposium. The deferrals, there's a lot of pressure right now to not partially eliminate the deferrals, but to completely eliminate the deferrals. So look for that to change at the May revise. There's no reason to continue to have deferrals with the amount of money that's coming in. And that this, what they call bifurcated COLA, in other words, special ed gets less of a COLA than everything else gets, or that the LCFF gets and other categoricals get less of COLA. That causes all kinds of problems, and there's a lot of pressure to not do that, to go ahead and give the COLA evenly across the board.
Thank you both for bringing us up to date. Any board member have any questions? Or if not, we'll go to item F, conference reimbursement levels. Dan also.
Okay, yeah, this is just showing that the rate for mileage has decreased actually from 0.575 to 0.56. And so it's just our obligation to notify you of that. Obviously, that's not very relevant right now, but those rates do go into effect January 1st, as of January 1st, 2021.
Thank you. Any board member have a question or comments? All right, we'll go on to item G, enrollment update. Dan?
That is me again. And I am going to share the screen with you and show you a couple graphs. So for an enrollment overview, I would just want to give everybody a sense of where we are as a district, big picture with enrollment. There's a lot of different data you can look at enrollment, but try to just kind of take it into some major themes to give us really the whole picture. Part of the backdrop, obviously, in our minds is where are we right now with enrollment? And I will just tell you that we do not see a decrease in enrollment right now at junior high and high school, even right now this year. That really hasn't been the issue. It's been TK and kindergarten, right, where we have lower enrollment than we would because those kiddos have been home. Some of those students have been home, so we do see a decrease there. So one of the most important things is going to be how do those students come back to us in first grade? And how do students come to us in kindergarten? That there's always that question there. It's always an unknown how TK and kindergarten come in. But this year it's a question of how first grade comes in. And so that could be very impactful. That's really the biggest piece of how does the pandemic affect our enrollment. And so I'm just looking at, on this one, elementary enrollment over these recent years. And I'm taking it in October. You can look at enrollment at different times of the year. You're going to see different numbers to compare. But the story here is that we were increasing with elementary enrollment significantly, leading up to 14-15, and this continual climb up to the peak in 17-18. And we have spoken in the last couple of years about declining enrollment at elementary. And are we declining in elementary? Well, from the peak of 17-18, you would say that we have declined in elementary from the 73-22 to the 72-91 in 1920. So there's a decline from there to there. If you look at it from 15-16, then you would say we're essentially flat from 15-16 over those years. But obviously from the peak, the question is, do you continue to decline down from that peak or do you level out? And as we project into next year, our best projections would put us at declining down from the 72-91, but primarily that would be because of the unknown of kindergarten and first grade. So you can swing 100+ students in enrollment just on that factor alone, and that could easily happen. So we could go anywhere from 7,000 flat to 7,200 just on that, really that factor. If I were to try to predict, I believe we're going to get a lot of those students back. And I think I would predict we're going to be right around that 15-16 level, maybe a little lower. But that is just my best guess at this point. And so junior
Dan,
high, yes, sir.
I'm sorry. Go back to that previous slide real quick.
Yes.
Just to make sure you don't have 2021 in there because it's such an anomaly with what's likely to be between 50 and 100 missing kindergartners.
Correct. Yep.
Thank you.
So junior high, you can see that increase. And again, you're looking at the elementary kids moving through and you've got this increase translating to junior high. And you can see the increase over these few years. And next year, we're looking at, we're projecting a number that's more like the 18-19 number. So I believe that we're going to start to flatten out at junior high school and stay around this level right here. Again, we'll see how it comes out next year, but I do not believe our projections are going to play out so that we're continuing to increase it at junior high at that rate. I think it's going to start to flatten out. But that's the story over the last few years. And then high school enrollment, you have this steady increase at high school. And you can see from 16-17 through 19-20, the rate of that increase. Obviously, if junior high starts to flatten out, then you may see that translate into high school as we move forward. We have to see how that's going to play out. But part of that story is the Central Valley versus the Ceres High School as compared to Ceres High School. And this is what this graph shows, where essentially at Ceres High School, we're looking more at a flat-ish line, minimal growth at most. And that's what we'll be looking at next year as well. Sort of this flat line at Ceres High, staying at this level around your 600, 1600, 610, 1610. And at CV, you're just getting this steady growth. And we're seeing that steady growth continuing into next year. So you're starting to get a widening of the gap that's just marching through these years between Central Valley and Ceres High School. And so that's something that we have to look to watch for as we go forward into the coming years.
Question for you about
yes,
housing at Central Valley.
Yes.
Are we still using some of the handline classrooms?
We
for
are.
Central
We are
Valley?
using. Yes, thank you. Yeah, we're using a handful of classrooms at Handline, and of course, we're using the new wing, obviously that was built
Right.
As well. And then, so you look at next year, and the school increasing again, then they're going to need to use more classrooms at Handline to be able to house those. We can do that, and there is availability to do that. But of course, over the years, if we continue to have to do that, then more of Handline would need to be used to house students.
Okay, thank you. Anyone else have questions or comments for Dan? Okay. Last item, Stanislaus Selfa local plan.
Christy's going to be talking about this.
Okay.
Hello, Board of Trustees, Dr. Siegel. I'm bringing you an item from the Stanislaus SELPA. It is the Stanislaus County SELPA local plan. Although this is a new document that is required by the CDE to be approved by all of the school districts that are part of the SELPA, the items that are within the local plan have been part of our SELPA policies and procedures over the course of time. It's just the CDE has required a new document to be completed and reviewed and approved by each of the school boards that are participating in the SELPA. So this is for information and study and will be brought back at a later time for approval. Are there any questions about the SELPA local plan that I might be able to answer?
In these 54 pages, are there any changes or from what we've been doing on a
No, I was part of the original committee that worked on taking our current policies that are part of the SELPA and putting them into the actual plan. We had to modify some of the language to fit all of the boxes that are part of all of those pages. But no, there's nothing really new. I would say that the only part that I would be interested in as a school board would be on page B4 of the document, and it talks about the actual LEA boards and what your responsibilities are within the SELPA, but none of that is anything that is not part of our already board policies and procedures that we have in place.
Okay, thank you. Anyone else have questions or comments here?
I think we're going to bring this back on consent in the future, each year. So from this point forward,
it's hard to know. Like I said, this is new. It has not had to be approved by school boards in, I think, 10 years, because originally it was if there were any major changes to SELPA policies, those would have to come to the board. This is a new document, and when I was reading, it's actually going to need to come back every 3 years unless there are significant changes to the actual local plan. So I'm hopeful that we won't have to bring this back next year, and that we can just bring this back every 3 years.
So if it's every 3 years like that, I think wouldn't bring it back on consent. I'd bring it back on action because it won't be routine.
Okay, thank you very much, Christy. Next item, I, school opening and COVID-19 update.
So I want to start with numbers. I appreciated at the public comments at the 6 o'clock hour, Supervisor Condit gave us an update on vaccines in the county and how they're just limited by the number of vaccines doses that are being distributed to the county. So I won't talk any more about that. I'm going to share my screen though and show you a picture. So what you see in front of you, you can see a graph right there, represents the number of cases being reported per day per 100,000 residents, averaged over 7 days. And the reason you average over 7 days is to smooth out the differences between weekends, days, and such. So 7 day rolling average seems to be the gold standard of making these kind of graphs. You can see the summer surge here. This thing, I don't even know what to reporting error. So really in your mind, you can smooth this out like that. There was a point in time where the testing labs fell so far behind and then they reported all their cases at once. And then it happened to a lesser extent again. So in your mind, just kind of smooth that out. You can see in here is about where we qualified to go red. So you can kind of get a sense of where we need to get get into that boundary between purple and red and be able to reopen our secondary schools to hybrid, right there. So then we have the winter surge as we get into the fall. At the top here is the Thanksgiving surge, Christmas, New Year surge, and for the last couple of weeks, we've been precipitously dropping. Now, in the last few days, we had a little hiccup where it went up a little bit, but this feature on your graph is not much different than these other little jagged features that you might see from time to time, having to do with just random fluctuations. I don't know if you can tell or not, but today it went down again. It's really hard to see it there. So it's not like we're seeing another trend upward right now. The question is how fast will this fall? It has to get back to here, so down over here somewhere, for us to reopen the secondary schools to a hybrid. Right now, if I was guessing, without wanting to be held accountable to this guess, I'd say sometime by the end of March would be a good hope. There's every reason to think that the numbers will continue to fall generally. They will not fall this rapidly consistently. What you'll see is similar to what you have here, which is it'll kind of start slowing down and curving out. So I expect it's something that looks like this. So if I get down in here, I'm thinking that's about March. Could be April, could be longer if the other variants that are surfacing are more contagious and have us go back up again. But I just thought you should see the numbers there, so you get a visual on the numbers and see kind of where things are at. We are going to open as soon as we turn red and stay red for 5 days now. They've changed it from 2 weeks to 5 days. That's good. We're looking forward to that. Also, as far as reopening on athletics, we are going to reopen athletics as quickly as we can per CIF, California Scholastic Foundation, Federation, CIF guidelines. As long as they keep allowing us to reopen, we will do so. We will not open faster than they allow, but we will open as fast as they allow. And so that is important. The last piece is, and I think Jody referenced this, the idea of cohorting. The current guidelines allow you to have cohorts, small groups of students and a teacher, a couple of teachers and a small group of students functioning together. We have decided that based on those dropping numbers and conditions in the county that are improving and the needs of our students, that it's important to allow students who are struggling with distance learning to have a safe, dedicated location, orderly location to do their Zooming from. So we're going to be having them in cohorts in classrooms. It will not be huge numbers of kids. You're limited in cohorts to 25% of the population of the school. So if a typical secondary class averages around 30, it would be 7.5, but that doesn't tell the whole story, because if every teacher takes kids, the ratio between staff and students, because of prep periods, is actually lower than that. It's closer to 24 or 25 to 1. And when you divide that by 4, because you're only allowed to have a quarter of the kids, you'll be somewhere in the 6, 7, 8 students per teacher if they all show up. We know from our experiences in doing this that they will not all show up every day. So it'll be probably, I'm guessing, 4 or 5 kids on a typical day for a teacher to have in their classroom quietly Zooming. If the students aren't quiet and are disruptive at all, they'll be sent home because they can Zoom from home instead of from the school. But we want to provide a safe, orderly, dedicated place where students can do their work. And we think that they will tend to be more engaged in that format than they will for some of the students at home. So students who are at risk. And that we are having planning time to get that rolling over the next couple of weeks, with a start of really ramping it up upon the return from ski week on February 16th. That'll be a good warm up to maybe a month to 2 months before students come back full time on the hybrid. And so we think that that's appropriate time to do that. Appreciate Mr. Moncrief, working with Mr. Moncrief on that, as Jody mentioned, and his support and work on that with his the association. And one last note, at the next board meeting on February 18th, we will have a study session on, we're going to call it learning acceleration, or acceleration of learning. We're not calling it learning loss, because that is a deficit mindset. And Dr. Peterman has forbidden me from calling it learning loss, so we'll call it learning acceleration, and just starting to talk about the kinds of things that we can do. We do not have our plans set, so it'll be an opportunity for the board to give input. We've had the same conversation with parent groups and staff groups as well. And that's important. We need to figure out kind of what kinds of things will be good practices. You've already heard a lot about summer school. We'll talk more about what we're doing in summer school. That the planning has had to have started with that. And we'll give you a full rundown of that as well. Any questions for me?
Dr. Siegel, I know you just touched on it just a bit about the athletics reopening. Possible, maybe not the next board meeting, but in the future, I would, like we brought in our activities directors in December, I'd like to bring in our athletic directors as well to hear from them.
We can certainly do that. It could be as soon as the next board meeting to tell you what's going on with athletics. I'm not completely understanding all of the ins and outs, so it's quite involved and complex what the rules are. So Dr. Viss and the athletic directors, I'm sure will be happy to do a presentation on that.
Yeah. Actually, we're meeting with athletic directors tomorrow morning, so I'll propose that to them as well. So we've been with Dan and myself, we've been in contact with athletic directors almost daily, just to keep up with the changes. But yeah, I'll present that to them.
Let's do that on the 18th.
Yeah, they'd be willing. Absolutely.
Yeah, why not? Let's get that information out there. Again, I want to assure everyone that we are reopening as fast as California will allow us to. We are not allowed to have our high school students back full time right now, even on the hybrid model. When we turn red for 5 days, we'll be able to, and we will do so. And the same thing with athletics. We're doing it as fast as the California Interscholastic Federation will allow us.
Thank you very much.
Mm-hmm.
Item J, Board Policy, December 2020 Policy Revisions. First reading.
You may have been concerned that the October policies were about to be approved and you would be deprived of having policies on the agenda, but no worries, the December policies are here.
And item 10, research. I think most of us have read that and you've covered those items.
Yes.
Very well.
Yes, you all know how I feel about the governor's initial proposal. I was really happy to hear him talk about that he was going to be flexible.
That it's, it can move.
The legislature is certainly telling him he's going to be flexible because there's a lot of pushback on it.
Okay, very good. Well,